Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, March the 9th. U.S. stocks are extending gains so far today with the NASDAQ Composite touching a new record high at 75.26. That's after data showed strong job additions in February but muted wage growth that indicated a gradual rise in inflation and help temper expectations of faster interest rate increases. Helping sentiment today were signs of a potential breakthrough in nuclear tensions in the Korean Peninsula and President Donald Trump's softened stance on tariffs. By the way, today our bull market for stocks turned 9 years old. Whoa, that's a pretty good record. Okay, on that note, let's go forward and look at three charts that could give us some insight into the week to come. First of all, as we do, we look at the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 index. And you may wonder why we always look at the SPY, or some of you look at the S&P 500 index itself. And that is because 4 out of 5 stocks 3 out of 5 stocks will follow the S&P 500 higher when it moves higher. 4 out of 5 stocks will follow it lower. So we kind of use the SPY or the S&P 500 because it is our benchmark index in the U.S. We use this as kind of a crystal ball to help us see where the majority of stocks will move to on the day that we're accessing. So it's kind of important to keep an eye on this particular asset. So the S&P 500 SPDR, again, today we have a daily chart. On this chart, the red line is the simple 20-day moving average. The green line is the simple 50-day moving average. The black line is the simple 200-day moving average. Now, as we know, the SPY made an all-time closing high on January 26 at $286.58. We then probably remember the big fallback here in the first part of February where the SPY fell down to its 200-day moving average to $252.92 intraday, then importantly bounced higher to close higher on the day. That's important that it bounced off that line and then started up. Then it rallied up in a near parabolic move to a new high up to 278.90. Then it topped out and right up here. Then it topped out and slid back to 264.82. So we've had quite a time here. Since then, it's rallied back up to its price today, where I captured this chart was at $277.16, or about $27.71 on the S&P 500 itself. Now, you can see this long blue trend line, a major trend line that I've drawn here. You can see that it acted as, when extended, it acted somewhat as resistance for the SPY. It moved up to this line, then fell back down. It's starting up again. Now, this trend line's coming in this time, this resistance, at about 280. We also have price resistance at just under 280, maybe about 279. So that would be 27.90 on the S&P 500 itself. Question is, we've got low volume going on this week. We have the RSI neutral hooked to the upside. That's positive. We have the MACD exactly on the 0 line. We do have the SPY above the 50-day moving average, which is coming in at 273.73 right now. That's positive that it could move above the 50-day moving average. Now we see, can the SPY move back up above, keep going, move above this resistance line at 279? Can it do that and absorb supply and continue to move higher, perhaps back to our highs at 286 and change up here from January? So can it do that in the coming week or weeks? And we'll have to wait and see to find out. If it could, then this market is really strong. If it gets tired out here, the fact that it made it back up through the 50-day is promising, is bullish. Question is, can it stay here and then continue to rise? So again, we've got low volume going on here. We do have another Fed meeting coming up in the next couple of weeks, so we'll want to keep an eye on this to see. This is important here to see if the SPY has got legs, if it does have buyers coming in that can overcome that prior supply, or if it has to take a rest. But we're moving through here some pretty important times, so stay tuned. Our next chart is the iShares Russell 2000 ETF. As you all know, in Tony's Market Club, we watch the IWM. This is the exchange traded fund that follows the Russell 2000 small cap index. We watch it as a leading indicator for the broader market because it acts like that. I call the IWM the drama queen because she seems to be able to move higher earlier than the other indexes, fall harder and lower than the other indexes. She can be a force to be reckoned with for sure, but she many times will give us indications, again, as to where the broader market's going to move. Now, the IWM, today when I captured this chart, it was trading at $158.06. It made an all-time closing high back in January, on January 23rd, at $159.96. So we can say we have resistance here at 160. Then it fell really hard with the rest of the indexes, but it didn't fall. It fell all the way to its 200-day moving average. It didn't rise above that. It fell all the way down to it, plunked down, as you can see, and made an intraday relative low on February 9th at 142.50, falling through the 200-day, but happily rallying back up to close above it. Since then, it's been rallying from there, pulled up to about $155, dropped back, and again, of course, rallied back up to where we are today. Now, as you can see, I've drawn a couple of important trend lines and channel lines here. We can see that the IWM was moving up in this channel that was so expansive and doing so well until the January 23rd fall, then fell down and began a new channel. So this lower channel is now breaking out. Again, we're back above this trend line today at 156 and 158 and change. Question here, we've had a big move up since this last low here, about 149. Big, strong move up for 6 days in a row. Interesting to me will be to see when and if the IWM pulls back here. Can it pull back to a higher low, potentially even staying above the 50-day moving average? That would be very, very bullish, and then start to move up again. Can it do that, or will it have to retrace further? Will it move back down into this lower channel? So it will make a difference to the broader market. We can see a good bit of volume coming into the IWM. We see positive indicators here. The RSI 14-day is moving in an uptrend. The MACD as well, and of course is above the zero line, as it would be because the IWM itself is trading above the 50-day moving average. So let's keep an eye on the IWM in the coming weeks, see how it acts, see if the drama continues, and hopefully it moves back up and continues its uptrend. On that note, let's look at our final chart today, which I find pretty interesting. The Van Eck Vectors Agribusiness ETF is symbol MOO, which is nice, MOO. It is a global ETF. It has 57 holdings. The top holdings are Nutrien, Deere, Monsanto, Zoetis, Kubota, Archer Daniels Midland. This ETF is all things agriculture, from agrochemicals, fertilizer, animal health, seeds, irrigation, farm equipment, and more. In June of 2008, which you can't see on this chart, Moo made an all-time high at way back here in 2008, made an all-time high of 66.20. I always go back and look at weekly and a lot of times monthly charts of something I'm considering getting into because I want to know where it's been. I want to know what it's been through, and I want to know where the prior highs are and so forth. So I found this very interesting. Now, Moo made a recent relative high. You see up here with the rest of the market on January 26th. Everybody made a high on January 26th except the IWM, which made a closing high on the 23rd. Anyway, Moo made a relative high back here on January 26th at $65.86. Remember, this last all-time high back here was 66.20. So it's managed, it's taken it all these years to move from 2008 all this time to get back up to its prior highs. Again, then it fell with the market and it's edging back up. It's in a wedge formation now. It's making higher lows so far. I like that. It has moved up to close above the 50-day moving average yesterday, Thursday, and today, Friday. And it's headed back toward this 64 and change resistance zone here, price resistance. You can see where I've drawn this blue line, and it's part of the wedge formation here. So, question being next week, can the Moo stay above the 50-day moving average, the green line, which is now coming in at $63? Can Moo stay above that line? Can it start higher? If it can, I may add shares to my portfolio. I like this pattern. And then I will, if it continues to move up, I'll put a trailing stop on it. My line in the sand here is $63 because that's the 50-day moving average. For any reason, should Moo roll over and fall below the 50-day moving average to close below it, then at least for now, I will exit the trade. I only want this trade if it stays above the 50-day moving average. So you may want to keep an eye on Moo. I love that. I love that symbol in the coming week and see if it's anything you want to look at. And now on to the coming week's economic reports. But first, please join us for Tony's Market Club this coming Monday, March the 12th from 4:30 to 6 p.m. Eastern. We'll have a mini trading lesson. I'll tell you the stocks and I will give you stocks and exchange traded funds that could be ripe for high potential trades. This is a low priced, high value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For more information, go to tonysmarketclub.com. And now, on for the economic reports this week. We have Monday, not much going on. Tuesday, Consumer Price Index. Wednesday, we have the Producer Price Index, Retail Sales, and Crude Inventories. That's the usual crude inventories, and we want to keep an eye on them this week. That'll be Wednesday about 10:30. Thursday, we have Empire Manufacturing, Philly Fed, our usual jobless claims, our usual nat gas inventories. On Friday, we have housing starts and building permits. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.